Hi friends, welcome back to Striving Aspirants. In this video presentation, we are checking some basic terms in accounting. Here we check some terms like entity or establishment, transaction, assets, fixed and current assets, liabilities, long-term and short-term liabilities, capital, sales, revenue, expense and expenditure. First one is entity. Entity means something that we can view or see in real, and that will be having some definite individual existence. In the case of business view, we can see a specific business like super or hypermarkets, jewelry, stationeries, companies like Reliance Industries Limited, etc. An accounting system is always built for a specific business entity, so it is also called as accounting entity. Transaction. Transaction means an event involving some exchange. That will be including money exchange and also the exchange of goods that is having value. And the exchange will be between two entities or two business organizations, etc. Example will be like purchase of goods, receipt of money, payment to a creditor, incurred some expense, etc. The transaction will be cash or credit. Next one is asset. Assets are the economic resource that is used by an enterprise and that will be having a value. For example, Super Bazaar is having trucks which will be used for its foodstuff deliveries, and it will be providing economic benefit to the enterprise. So this is an asset and it will be shown in the asset side of balance sheet of that Super Bazaar. The broad classification of asset is fixed assets and current asset. Fixed assets are assets which will be in the organization for a long-term basis, such as land, buildings, machinery, plant, furniture and fixtures. These assets are used for the normal operations of the business. Next one is current asset. Current asset will be in the organization for a short-term basis. Example include debtors or account receivable, bills receivable or notes receivable, stock, inventory or goods, temporary marketable securities, cash and bank balances. Next one is liabilities. Liabilities are the obligations or responsibilities of a enterprise to pay the debt that is taken in a business organization. So the business organization is liable to pay the debt taken in the future time. Liabilities represent as the creditor's claim on the firm's assets. Check this example. Super Bazaar purchased goods for 10,000 on credit from the easy food deliveries. When the balance sheet of this Super Bazaar is prepared, fast food or easy food deliveries will be shown as creditors on the liability side of balance sheet. Similarly, if Super Bazaar is taking a loan for a period of 3 years from a bank, it will be also shown as liability in the balance sheet of Super Bazaar. Liabilities are classified as long-term and short-term. Long-term liabilities are those which usually payable after a period of 1 year. For example, a term loan from a financial institution or debentures or bonds issued by a company. And short-term liabilities are obligations that are payable within a period of 1 year. Example, creditors, bills payable, overdraft, etc. Next one is capital. This is the amount invested by the owner as an amount in the beginning of a company or business entity. This will be in cash or assets. Capital stands as an obligation and a claim on the assets of business. So this will be shown as capital on the liability side of balance sheet. Sales. These are the amounts we get when we sell our goods or service to the customers. This may be cash or credit. revenues. This is another word used in the place of sales. Means we will use both the words together, like sales revenue. As said before, it is the amount of business earned by selling its products or providing service to customers. Some other revenue items are commission received, interest, dividend, royalty, rent. All these amounts received are revenues. Revenue can be also called as income of the business. Next one is expense, which is the cost incurred by a business in the process of earning revenue. Expense include depreciation, rent, wages, salaries, interest, cost of heater, light, water, telephone. These all are expense. Next one is expenditure. Spending money or incurring a liability for some benefit, service or property received is called expenditure. Payment of rent, salary, purchase of goods, purchase of machinery, purchase of furniture, etc. are examples. If the benefit of expenditure is exhausted or finished within a year, it is treated as revenue expenditure. And if the benefit of an expenditure lasts for more than a year, it is treated as an asset, also called as capital expenditure, such as purchase of machinery, furniture, etc. So that's all about the basic terms in accounting. This is the first part, and the second part will continue in the next video presentation. So till then, it's bye from striving aspirants. Subscribe our channel for getting more related videos. Thank you for watching this video. Bye bye.